Welcome to today's What Will Move the Market show. I'm your host Prem. It's Monday, December 22nd, 2025, and here is everything you need to know as the markets open for today. Let's start across the Atlantic. Wall Street finished the week on a strong note Friday, with the tech rally stealing the show. The S&P 500 climbed 0.9% and the Nasdaq Composite jumped 1.3%. Building on Thursday's momentum, as semiconductor stocks like Nvidia, Palantir, and Broadcom all surged higher. The Dow Jones added 0.4% as well. The week wrapped up with positive gains for both the S&P 500 and the Nasdaq, recovering from some earlier weakness, while the Dow did slip slightly for the week. Behind the moves was relief over inflation data, suggesting the Fed may have more flexibility in the year ahead, and a strong earnings beat from Micron technology that revived confidence around artificial intelligence spending. Top gainers on the day included travel stocks like Carnival and cruise operators up nearly 10%, while healthcare names like Moderna also climbed. On the flip side, Nike faced some selling pressure despite management commentary, and a few defensive stocks like utilities and telecoms retreated. Turning to our Indian-American depository receipts overnight, the movement has been modest but worth watching. ICICI Bank's ADR is hovering around 29.92, with a gain of 0.77%. HDFC Bank's ADR closed Friday at 35.89. Infosys has been the headline, though not for the right reasons. The stock experienced an unusual trading halt on Friday after a mysterious 50% price surge triggered circuit breakers. The company clarified there were no material events, suggesting it was a technical glitch. Reliance's ADR continues to track the broader sentiment. The good news for Indian investors is that the overnight action in these blue-chip ADRs remains stable, keeping pace with our domestic banking and IT sector's strength. Let's look at Asia this morning. Japan's Nikkei 225 is up 2%, showing solid momentum after the Bank of Japan's recent rate hike. The Hang Seng in Hong Kong has gained 0.77%, reflecting broad gains in financial stocks, while China's Shanghai Composite has edged up 0.5% as defense and aerospace sectors rally on geopolitical positioning. Most importantly for us, the GIFT Nifty futures are signaling a gap-up open. As of the latest trading, GIFT Nifty is pointing to a positive start for the Nifty 50, suggesting the index could open around the 26,170 range, indicating decent buying interest from the overnight session. This positive Asian cue, combined with the Wall Street recovery, is likely to give our markets some early momentum when the bell rings. On the geopolitical front, there's an important trade story developing. The Trump administration's 50% tariffs on Indian goods have certainly created headwinds for our exports, particularly hitting textile and gems and jewelry sectors hard. However, latest November trade data brought some encouraging news. India's exports actually rebounded by almost 20% year-on-year despite the tariff overhang. This suggests our manufacturers are finding alternate markets and the tariff impact, while real, may be less severe than feared. There's still significant uncertainty around a formal trade deal with the United States, but the rebound shows resilience. On the domestic front, there are a few things to keep on the radar. The RBI cut rates by 25 basis points to 5.25% on December 9th, with a dovish tone, suggesting more easing may be on the table if economic data softens further. Foreign institutional investors have been showing measured optimism, with net buying of around 600 crore on December 18th, while domestic institutions remain strong buyers. The real wildcard this week could be any commentary from the RBI, or flows on likely FII positioning ahead of the new year. Watch out for any commentary on the new petroleum rules announced earlier this week, which could boost infrastructure and energy stocks. There are also some IPO pipelines and FNO developments to track, but nothing major launching today. The key for day traders is to stay nimble on sector rotation, particularly in banking and IT, where valuations remain stretched. From a technical angle, the Nifty 50 is logged in consolidation between 26,200 on the upside and 25,700 on the downside. The index faces resistance near the 20-day and 50-day moving averages around 26,050 to 26,100. If the Nifty breaks above that zone with conviction, we could see a push toward the record zone of 26,300 to 26,325. On the downside, the 25,800 to 25,850 range acts as the first support, with the key level holding at 25,700. The Bank Nifty sits at 59,069 and faces immediate resistance near 59,700 to 60,000, while support sits around 58,700 and the 50-day moving average at 58,470. Commodity markets remain interesting. Crude oil is trading around $60 per barrel, with global supply abundant and trading within a $55 to $58 range this week. Gold continues to consolidate after a strong month, while silver has been the star, surging past $67 an ounce after hitting record highs near $67.45, driven by tight supply and investment flows. Here's the day plan for traders. We're seeing early Asian strength translated into positive futures, which should support an opening bounce for the Nifty. However, this is still a consolidation phase, so do not be overly aggressive with fresh long positions until we see a confirmed breakout above 26,050. The safer trade is to look for tactical bounces in financial and IT stocks for intraday gains. If global markets continue to hold strength, watch for any break of resistance levels, particularly in the banking sector, where valuations have been coming under pressure. Conversely, if there's any reversal from Asian markets or disappointing US macro data overnight, the Nifty could test the 25,800 support. Size your risk accordingly, and remember that December is historically lighter on volume, so moves can surprise quickly. Stay tuned for the evening wrap as we bring you real-time market commentary and analysis. Send in your questions and market observations, and subscribe to this podcast to hear US every weekday morning at 8. This is Prem, and we'll be tracking every move for you through the trading session.